So we have had all combinations possible, left to right, right to left. Every time it is wrong. So yeah, I think that maybe in the first or second time we are sitting in the right order. Thank you for joining in the morning. I think I'm so happy to see leadership team joining in guiding us. Thank you, thank you, thanks a lot, Pankaj.
Thank you.
Thank you, thanks a lot, Vineet. I think this is amazing. So I think critical part I want to talk about in the morning is whenever we look at digital, we look at profitability, cost kam ho jayega, customer experience pe kaam karenge and all of that. But I think we want to look at how do you balance it out between profitability, customer experience, cost efficiency, and also about how do we give more benefit back to the customer. I think as yesterday speaking about a case where I was trying to take a loan of a lakh, a crore actually, for a home and or a lap, and then I got a number from one of the bank, one of the NBFC, very large NBFC, giving me the processing fee is 4 lakh rupees. जान ले लोगे क्या मतलब क्या processing करने वाले हो, right? So I think the point is when you go digital, what kind of benefits you can sort of give back to the customer so that customer also gets the value, right? Otherwise, it'll get added to top line, bottom line for one side, but customer is just out of the context, right? मैं तुमसे वैसे ही लूंगा जैसे करता था. And in fact, the best part is customer does all the work now. The customer does transactions and they are not getting paid for that service. So I actually wanted to start with Vineet, with your perspective. Maybe you can quickly share some perspective also on what you are doing in HDFC Life, and as well how you're thinking about how digital can provide benefits to all stakeholders and ensure that employees, customers, and everybody else gets benefit.
Sure. Thank you. And thank you for having me here. I think it's a pleasure. I think just addressing the first point, how does the benefit really get passed on? You're clearly looking at more efficiencies. More efficiencies mean cost saving. And that benefit of cost saving will get passed on to the customer, maybe not on a case-to-case basis, but what happens is that if your cost efficiency improves and the industry cost efficiency is also improving, you are forced to, pass on benefits to the customer because otherwise you become non-competitive in the market. So it does get passed on to the customer, maybe not directly like a one-to-one case, but it does get passed on. The point about, how do we really balance this entire equation of cost and the benefit and the stakeholders? So I'm just coming to an insurance perspective. We have largely, let's say, 5 stakeholders. Okay, so there is customer, there is a partner who's largely intermediating, could be an agent, could be a corporate. There is regulator, there is shareholder, and there are employees, right? So these are the large, 5 stakeholders for any kind of a digital change. I think among them, all of them will benefit. Anything which happens digital will benefit because my response time, real time, all the TAT, etc. improves. Shareholder and employee could be an angle where there's a change management from an employee angle, and from a shareholder, there's a cost benefit. How much will I benefit by making this investment? And that's where the critical part comes in, that you have to be conscious of how much you are investing where and not over-investing. I think so that balance of figuring out what will give me the real benefit and what is, let's say, right now an experiment or not at a scale that it needs to be digitized fully and could be handled as a hybrid is the call I think that needs to be taken. And that's how we do it. So when we look at any process which needs to be digitized or improved on the existing process, it's about how much efficiency or what is the cost that we incur today. It could be a hygiene, so you could just say it's not about a cost benefit, it's an hygiene because the world is also changing rapidly. So from those few angles, you look at a problem and then you decide. So that's how you kind of reach that point.
Maybe I was actually trying to extend, so from you're going through a massive transformation, so maybe a quick idea you want to talk about kya soch rahe ho aur kya kar rahe ho?
Yeah, so we are doing a massive transformation, except for the core, we are practically touching and changing everything else. It's a difficult problem to solve, and it's a long term because it's a running ship. So when you're solving it while business is on, the problem is slightly different than trying to just create something fresh. From a stakeholder angle, I'll just maybe focus on that point. There is also a resistance to change, which is a large thing which needs to be managed in a transformation. And most of the people underestimate change management as a transformation. It's easy to, if you have a requirement to bring it into the new technology, code it, reconfigure, I think is one part, which is, let's say, 50-60% of the task. But a large portion is how do employees react to it, how do employees accept the new technology, because they're also used to a certain way of working. There could be insecurities, there could be, figuring out that what will happen to my job, and all this stuff, comes in. And I think that's the critical point, that how do you really involve the team? And I think we did that right from the beginning. So every team which is, today owning a particular process which is going through a transformation is run by the stakeholders and the business team. So they are the ones defining what needs to be done. For them, it's an opportunity to solve for the problems that they have, right? And create more efficiency and create more scale that we can do.
Thank you. Thank you. Pankaj, honest answer, I didn't meet you for almost all my life, and I met you maybe a couple of years back. And then I realized everybody was talking about you all the time. I just didn't connect the person, right? So I think we hear about all the stories, what you're doing. And of course, in Aditya Birla group, you're doing a lot of initiative as well. So maybe you can talk a bit about your initiatives you're taking and also maybe give a perspective on how digital initiatives can be taken on HL lab business and of course payment side where you are a big expert as well.
Yeah, thank you, Samir. Thanks for hosting me here, and it's a pleasure to be here. I think at Aditya Birla, I think 2 years back, we took a leap of faith in terms of understanding that where were we on investments that we had to make on data, digital, and technology. Very common, but yes, it was very important for us to see where we were, and I think we took 2 or 3 important decisions. First was to create customer-facing platforms that will help us to build acquisition which is direct at scale. That was the first decision, and in that domain, we selected 2 important customer segments in India. One is the first income to first kid segment in the country, which is in the range of about 10 crore to 12 crore kind of population, which is a population which typically is open to change, has less inertia, is going to be the affluent in times to come. So that was the first segment. The second segment that we thought is the most popular one and most underserved one in the country, which is the MSME segment, frankly. And third platform that we thought that we would create is that ABCL, Aditya Birla Capital Limited, is a conglomerate which has an insurance company, mutual fund organization, health insurance company, NBFC and HFC. So between all of us, we have 2 lakh plus distributors, right? So just imagine that if there's a mutual fund distributor and he wants to augment his income by becoming also a lending distributor, how can you make lives easy for him to get onboarded quickly together on both the companies and then start sourcing? So I think that was an important decision. So in the last 2 years, we have created 3 platforms. The first one is ABCD, which is the tagline is everything finance made as simple as ABCD. That's the ABCD mobile app and also the website that we've created, which addresses the first income to the first kid segment. For the MSMEs, we've created Udyog Plus, which is a platform for MSMEs, which not only caters to the financial requirements of the MSME, it also has all the affiliated needs of the MSME. So it's a one-stop shop for MSMEs that we've kind of created. Recently, a week back, we've launched our platform for the distributors, which is called Stellar, which is going to help us to onboard distributors on multiple lines of business in one go, and then also engage him meaningfully. So I think these are the 3 important platforms. A bit about how we have fared there. So on ABCD, we launched it on 16th of April this year. We already have got 41 lakh customers there, very engaged customers. We have already got about 20 lakh customers who generate their VPAs as well, and very engaged set of customers. We also see them actively coming onto the website, and one of the interesting feature you started off by talking about customer convenience. So one of the things that I would want to say is that, see, most platforms, Samir, and all of us are in the business are only doing buying and selling. One unique thing that we realize is that in the plethora of all the platforms that people have launched, and including in my previous assignment, in ICICI Bank as well, I think it actually is quite crowded, for the customer, and simplicity gets valued even today. So if you see our user interface, our user experience that customers see, it's a very neat, it's a very, very neat interface. We got recognized also at the relevant forums. So I think that was very important. And tagged to that is the feature that we launched, which is called My Track, which allows you to track your financial health and your physical health very, very easily. So you don't need to buy and sell. You can only track your entire portfolio across all the banks on the My Track. You can also track your spends. You can also take a selfie and track your health. So a bit about the ABCD platform. Coming to your other part of the question, which is you asked me about the loan against property and housing loans. What have we done? I think in that space, Aditya Birla Housing Finance, in the last 2 years, has, I think, remarkably grown. We've doubled the AUM in 2 years. So from 13,000 crores, 2 years. So from 13,000 crores of AUM that we were on December 22, at the end of December 24, as we declared our results last week, we have now moved to 27,000 crores of AUM, growing very strong on that side. And there as well, Samir, the core has been how to make life simpler for, and Vineet spoke about the stakeholders. I think how can life become simpler for our customers, our employees, our partners? How ease of doing business can be enabled, and I think that has really helped us in driving productivities. And I think we've not been usurious in terms of also charging heavily to customers. I think customers have felt that we've been able to pass on those benefits to them. Therefore, the relevant preference to us as well.
Thank you. Thank you. I think, can somebody ask the next room to just reduce the music, please? I think let's move to Vineet from a technology perspective. You spoke about cost and benefits, but let's come to how do we personalize the experiences on insurance side. I think if you look at industry-wide, all other industries have moved ahead. Payments, lending has moved ahead. Even the echoes of the world exist in a particular segment, but life insurance is obviously area which is slightly still dated. So how do you think that those experiences can be personalized, and it is right now still a push product? Do you think at some point in time it can become more of a usage and a pull product at one point in time so that you can actually align to their needs? Or interestingly, fact of the matter is all of us are scared to go to our banks because of logical reason. वहाँ कुछ तो बेचते right? So all of them are only selling insurance to us, right? So.
So I think two parts to this question. One is that, how do we really personalize, and why is life insurance really behind the curve in terms of personalization for this thing? So there are two parts there. One is clearly, it's not a very high engagement product. It's a long-term product. A customer comes to us maybe once in a year to pay a premium. At the beginning, when he's coming and buying the policy, at that onboarding stage, there is an engagement which is extremely high because there could be assessment of the risk, there could be medicals, etc. So it's an extremely high engagement. But moment that issuance happens, then it's just a once in a year engagement. So there's not too much of data that we are actually collecting of the customer. Second is because it's an old industry. We are also about now 22, 23 years old. And from that angle, the data is also not so well organized. To personalize, I think the first fundamental thing is organize your data extremely well. And that's what we are doing as part of transformation also. We have a stream just on transforming our entire data platform. So that will help us really bring all these things together. Ever served customers would be really, really high, and we could have a lot of information available with us. Second is enrichment. I think I heard Anjani talking about it in the last session about how do we enrich data from external sources and make it very easy for the customer consent to be given so that it can be enriched. These are the elements which can really help you personalize the journey. Because otherwise, all that you have in the information is the form, and you're making the forms shorter and shorter to make it easy for it to be completed. So you need to start enriching the data from some other sources. And that, if you can do it and part of the journey, and take decisions, and journey can be more rule-driven. I think that can really help the personalization. We are going in that direction, and hopefully, this will make it happen. Second part is, can it become a pull product? The answer is, to some extent, yes. The category is not very exciting from a customer angle. Not like payment that I do it 5 times in a day. Nobody, we thought that term can become a pull product, but it's ultimately an assisted pull product. People do come and inquire and do this, but then finally before buying, they need a nudge, or they need a call, or they need to talk to
all
somebody.
the time. I couldn't take it online. It has to be physical, right?
So there has to be some nudge, I think, because it's complex, it's intangible, and it's long term. You're committing for a long term, so there are questions in customers' mind which needs to be answered. And maybe someday AI will help us do that, but today it's a human face which helps bring that trust. So I think from that angle, I would say, I hope it will become a pull product soon, but there is a challenge of the intangibility and the complexity of jargon and some of these stuff which still remains.
No, I agree. I think jargons are complicated, right? I mean, in medical insurance, you don't know when you go to hospital what bill is going to come. It's linked to the bed, and you have no idea what the bed will look like. So once I went through the operations and realized my bill was huge, and I ended up taking a room way below what we normally do, because the cost of the other side was like double, right? So you 1 lakh to 2 lakhs just to get a toilet in your room. it was weird, right? So the clauses can be scary, right? So anyway, let's Pankaj, from your perspective, uh, I think fintechs obviously prioritize experience over profitability, right? That's what happens all the time because they're expecting some money to come in future, and there's a funding behind that. So how can sort of banks and lenders provide similar experiences because customer expect, but it doesn't? I mean, should can we close the door, please? Can you close the door, please? Yeah. Can you close the door? He's opening it up. Close the door. Reverse the expectations, right? So how can banks and lenders achieve a similar standard without losing the money, right?
I think on fintechs also, I think there is growth capital and then there is capital which is provided for return. So I think anything, any activity, any sort of customer experience which is not ROA accretive in the long term, I don't think the funding, continues. So that is pretty clear, from that perspective. I think the pressure on building the returns, obviously you are regulated, to that extent, and you are also in public eye. So obviously it is higher, when it comes to banks, large insurance companies, so, also NBFC, HFCs. I think there is a need balance, and, two examples when you were asking this, I was thinking. So while, customer will be at the core because essentially he's paying, for your salary, he's paying, for everything else that remains at the core. What level of convenience would you want to provide, and what is easily available, and what is easily, what customer values most, I think is the prioritization that you will do. A simple example, couple of them I will give. So the popular belief that a home loan or a loan against property document that you have to sign is ranging between 100 pages to 130, 140, depending upon which lender you go to, right? So borrowing from what was available, in the DPI, I think we were the first there, to go in for a complete agreement. And, typical home loan situation, Samir, you always will have an applicant and co-applicant. You never will have a वो हो नहीं
And
सकता
in
कि
fact,
एक
you
ही
want
होगा.
it. In fact, we have so many lenders who have to. A clause is that they should be whatever. Somebody should be there, and that has to be women also, right? So
Yes. So we introduced e-agreement there, and instant benefits, that, and customer really valued it. And while he had to sign earlier, यहाँ पे it was very very easy, for the customer. And the complication of getting two people at the same time, sometimes there are multiple borrowers also. You take a financial borrower, co-applicant, non-financial co-applicant. So I think it was a great, service that we did for the customer, for us as well, because the costs come down significantly, turnaround times improve, it becomes more predictive. Also chances of any sort of a fraudulent behavior also reduces because there's validation. The entire build up today, if you look at home loans, loan against property, I think frankly speaking, apart from the physical handover of the collateral documents, uh, everything almost is assisted digital. And that life insurance and I would say home loans is very similar to that extent. Digitalization is there, DIY is available, but adoption is more assisted, right? That is the world where both of us I think operate. In that domain, I think everything is digital, barring the collateral, handing over. But there also I see, with players like Matram, players like Teal, ULI, of course, helping us, on that side. I am seeing those costs also coming down and turnaround time coming down in title search and evaluation also, which is laborious today and costs, let's say, 4,500 to 5,000 rupees today.
I know.
And if it's done digitally, the cost reduced to 2,500 to 3,000 rupees. So I think the key or the secret sauce, I think there is to identify what is the core requirement of the customer, identify and then get behind it, make sure that it is value accretive, and it is a win-win, for all the stakeholders that we do. It's a thin balance. I'm very tight rope walk, but I think that is what differentiates, because growth capital may not be available, and that kind of a window is not available because you are in public domain, right? So every quarter you have to people look at what you are doing, and if there is something that you have invested in growth capital, the questions that they will ask you, the tolerance level is not as high. No offense meant to any fintech. Worked with them very closely, but I think that's where we are on this.
thank you. And be ready with your questions. I think we'll have some time to take your questions as well. You can raise your hand and maybe next question will come after this. So I think we need, from your perspective, when you do these transformation, Talk about the real challenges you face, and maybe many of them will go through transformation as well. That's why they all are here. What will be your advice that when you go to large transformation, what are the things we should really be careful about?
So I think let me go step by step. So there is first is how much do you want to transform? So when you started the transformation, it started off by saying that let's do a few things here and there. So it's like in a car, change the tires, change a few things, and it can serve you for another 5 years. Versus saying that do you really want to change your vehicle completely? So I think that's the first decision that
You guys can hear at the end. Yeah, that's perfect.
Okay, sorry. So maybe I'll repeat if the mic was too far away. I think the first decision is that how much do you want to transform? And that will also have a cost implication, a period implication, but how much do you want to transform? One method is just change a few things here and there. Your technology will be good enough for the next 5 years. The other is, do you really want to, do something which is more future ready and can maybe last you for 10, 15 years going forward? And that decision, I think, is the first decision that any company or any person has to take. The pros and cons of this decision where you have to find your balance is about cost, how much effort, the time period available, and when do you want to really see the results coming in. Because if you do the quick fixes first, you will see results faster. Maybe the pain points will be relieved, etc. If you do the longer fix, the initial setup might not even be visible. And when it starts to get visible, then you will see the pain points getting released. And the cost obviously will be higher by doing a full fix. The second point is that then where do you start? And how do you really break your processes into this thing? And this is, every domain would have a very different answer. But I think finding those synergistic pools where you can start to create, because this is a running ship. Every company will be a running ship. So you can't create something and then suddenly say that move the pipe from here to there, because then it's too far away for any realization to happen if you want to do the full transformation. So I think doing it in parts, creating MVPs, going live with MVPs is the next phase. From a management perspective, I said earlier, change management is a very big one. And doing it in parts also helps do the change management, because people in the organization start to see advantage. You can show those advantages to other stakeholders as well, and you can, customers start to see advantage, shareholders start to see advantage, and all that starts to come in. So I think my suggestion would be, first, obviously, decide what is the appetite for. Once you know what is the appetite, then start doing it in parts instead of trying to do a full-fledged. Some things will need to be full-fledged. Like I'm saying, the data platform, you can't do it in parts. You have to do a full-fledged. So some of these things do become a part of the journey. Make sure that the team which is working on the transformation has your existing functional employees as part of it. I think that's one very key piece which we did, and we are really, I think, benefiting from that piece. Otherwise, I've heard a lot of horror stories of transformation. You miss out, and then people say, this is junk, and all that can happen. So now that we are going live with MVPs, we really see there is huge acceptance on day one, and it starts to show those benefits.
I think it's big. So I once went through a core banking transformation in US, the largest ever. And the challenge was the team was not ready. So platform is ready, but team is not ready. So team is not ready. They're not willing to build anything. So we had a strange situation. The code was ready on the platform side, and the connectors on the bank side was not built because they were resisting, saying, why are we building this change? And they upgraded back to a COBOL-based platform, saying they're more comfortable with that technology than the new age. And that's what I think happened, right? So I think almost, I don't know, maybe 100, 200 million down the drain is so bad, right? So I think, Pankaj, from your perspective, again, same thought process. You have done a lot of transformation. So quick view on what is right, what is wrong, and what is just a fetish, saying karna chahiye ki nahi karna chahiye, wo bhi important hai. Yeah.
I think Vineet, I think covered all the facets, but just to reiterate some of them, I think first is the end objective. I think what is it that you'd want to achieve, that I think clearly needs to be articulated. Second is, I think when you do this, what is the appetite, and the stakeholders' appetite, which is somebody who is backing you, investing you. What is the appetite, and what is the duration of the appetite? I think that is also very important, because there will be some stakeholders where you will say, I have put in 5 crores, I need to see the outcomes tomorrow, and then there will be the other types where there is a time that will be provided. So that's the stakeholder appetite, very, very important. And then I think when you decide, like I said, the end objective, what are those steps that you will take to reach there, and for every single step, I think the cost benefit that you will have, that this is the cost that you're going to incur, this is the impact that you will generate in the immediate and the long term. Then I think what truly happens is the element of bringing people along the curve, which is change management, nothing but change management. I think the right combination of people who are going to drive this. It needs to have sponsors. Any digital transformation will require sponsorship, at the topmost level, because but that is where then the organization comes in together to support that particular transformation. That is so critical. And I've often seen projects fail because the rhythm of governance. Governance with a technology provider, a governance with a consultant that you've got, what questions to ask, what is the governance rhythm, what are the trade-offs, because my experiences of all platforms, the most important thing sometimes is the trade-offs. And I have seen in my life, to be idealistic, it really costs you sometimes, right? So when do you have to be idealistic? We spoke about MVP, the value of MVP versus MXVP sometimes. Because if you're launching something in MVP when market has already launched that, you will get limited outcomes, versus sometimes when you're launching something new completely in the market, MVP makes a lot of sense. So I think relevant trade-offs, are so important. And the last that I want to cover is, I think, a very interesting thing over the years that I have learned is that in digital platforms or transformation that you do, you always see the maturity of your organization and the maturity of the vendor that you are dealing with. So in my experiences, if both are not having the maturity, irrespective of the capital that you have, and I have had my own experiences where the projects have failed actually. So you have to do two by two. So if your team is very new, if you're in a new setup, if the maturity on building platforms is not very high, do not choose a technology provider also who is trying this for the first time. So the maturity has to kind of match. An example, for example, for us, when we went on to build our loan origination system and also loan prospecting system, Aditya Birla Housing Finance was, I think, on the maturity side, it was learning and it was building, not at that top end. We went and chose TCS, for example, on the platform, because at least on that side, there is robustness and there is understanding on the thought process. I think that two by two also is very important in choosing your right players. So I think choosing the right platform players, how is your assessment method? I think also becomes very important, because most of the projects will not be done in-house. They will have somebody who's working with you. So their gestation, their timeline, their investment, their horizon, I think also has to be seen.
No, thank you, thank you. So questions from the team here. Anybody has any question, please? Yeah.
So in transformation,
Just one second. Can you ensure that the music on the next room is slightly lower, please?
I think they are trying to get people in.
They get excited.
Yeah. So in a typical transformation, moving from the as is to the to be, some of the challenges are around, let's say, data migration. Do you keep parallel runs? Do you actually ensure a cutover? So any experiences coming in from there in terms of how do you ensure change management and yet ensure, I would say, comfort in terms of data moving from the as is to the to be?
So I think both the methods can be followed, and it's about the comfort on how the team is more convinced. My belief is doing parallel run, especially in case of data, is very critical, and it has to be done for a reasonable period of time, because you cover a lot of use cases which might not get covered if you do it for a very short period. So I think in a data payment and all those kind of processes, it's good to have a parallel run running for a few months, maybe 3, maybe 6, depending on the size. To be able to then understand and then gradually start shifting and cutting off some parts of the old one. That's my view, but both of them could work depending on the size of the problem, I think.
I want to add to what Vineet said. I think it's also very important, and since the question is about data, I think the decision making also on what will you survive with your existing player, what is the capacity that he's got. So for a better use of word, how much of Band-Aid and how much of CRs can help you to improvise on the existing platform versus the cutover. And earlier question also, the decision on cutover is very important because, all of us, and if we are, there in an organization for a very long period of time, it may sometimes happen that you fall in love with what you have created. And, that is a very important. So Brahma, Vishnu, Mahesh, I think is very important here. So you have to take a call that what you've created, you have to destroy also, on the side of digital platforms and move to the next. So cutover is extremely important is also what I feel, specifically on data.
Thank you.
Can I? Yeah, my question is for Pankaj. Anil Tulsiram from Cantor Evaluate. And this question is not on Aditya Birla Housing, but HFC as general. We are talking about the cost efficiency. So regulator introduced co-lending with the view that it can reduce the cost for the end customer, but most of the top NBFCs are hardly into co-lending, specifically the HFCs. So what do you think the hesitation is for? Because it won't result in the reduced cost to the customers, or it's a very complicated process, or what's the reason for no interest?
So co-lending essentially, I am not very sure about the cost to the end customer. I don't think it changes that much, but I think certainly it helps in optimum use of capital. That is the main use there, because finally when you're optimizing capital, either one of the ways will be direct assignment, the other ways could be co-lending, that you will optimize your capital. I think some of the challenges which continue to remain is that the partners who are typically there for co-lending, I think the time taken, the gestation, required, for integration, with large, even large PSUs, I think is very significant. And to the other side of it, I think capital also, is flowing in, and you would have tracked it since you're asking this question, how capital is also flowing in, to the HFC sector as a whole. So I think in my assessment, the trade-off between if capital is available and it can be deployed meaningfully versus doing co-lending and the trade-offs in between, I think somewhere the challenges, are coming in larger on that side. Of course, there are platforms which have come in which help you to also do co-lending. There are platforms, there are aggregator platforms which help you, get there. But I have not seen too much of success there, and the last thing that I want to say is not co-lending, but NHB along with some of us, large HFCs, are creating a very large platform in the country. The company has got formed. It is RDCL. So typically for a HFC, the only ways in which you can optimize your capital is co-lending or DA. But it is going to create a platform where it's a market-making platform, where till now, till today, the access to borrowing, for us largely is term loans, and very few companies also, large HFCs have access to bonds, which is the NCD market. The RDCL platform, once it comes in, it helps you to do market making, and smaller HFCs also will be able to come on the platform, and some kind of a guarantee also will be given by RDCL to that extent, and more number of lenders will come on the platform. So I think that is where it is. So I think it's evolving. I don't think co-lending as a use case has evolved that much right now. It's because of the trade-offs that are there between what I just mentioned.
No, this is great. Thank you. Thank you. With this, we pause, but I think the journey on transformation continues. I think 10 years back, we would say transformation is happening. We are still doing the same transformation. Maybe the expectations and the demands are changing. So thank you. Thank you for joining us. This is amazing. Thank you.
Thank you so much, gentlemen. Ladies and gentlemen, let's have a huge round of applause for them as we present them with a token of our appreciation for their time and their valuable insights. Thank you so much, Mr. Arora and Mr. Gadgil.